Hello and good morning, listeners. Welcome back to Almus Market Morning, your morning brew of global financial update with Jayaram Krishnamurthy. Now, folks, last week we have had a lot of central bank meetings and updates on the policy front, but it was the weekend which is currently stealing the show on the updates front with a lot of geopolitical updates. US has entered into the uh, Israel-Iran conflict with updates from President Trump on the uh, attack on the three of the nuclear facilities for Iran, while the Parliament of Iran also mentions about approving the closing of Strait of Hormuz. Although there are still a lot of updates where the questions are looking at the kind of reactions from the market front. So, JK, I'd like to know more on what's going on and what should one be thinking as to the updates on these uncertain geopolitical front.
Morning, Shikhar. So, yes, as you said, the economic events have actually taken a backseat now, and we are completely focused on the Iran-Israel conflict and the latest development of US joining the fray directly. So that's a big development, and weekend reported that US dropped bunker buster bombs to neutralize the Iranian underground nuclear facility, and that was something that was feared. But going by White House statement that US will take some 2 weeks to decide whether they will get involved or not, market was somewhat calmer on Friday, and this probably it came a bit too early. Now, while that is over, what the market is focused on is what Iran will do, for as a retaliation. Uh, they have already got parliament approval for uh, closing the Hormuz Strait, which is a key route for shipping at least 20% of the oil supplies to the world. And that will be a big thing, and it can affect oil supplies, oil prices, etc. However, the catch is that the final decision rests with Iran's Supreme National Security Council, which is the highest security authority, and they have to decide whether they will do it or not. Opinions differ about whether they would do it, because that can impact themselves, and also they can it will impact China, who is their own close ally. So market is waiting for what happens next. In the meantime, Netanyahu, Israeli Prime Minister, has said that they are close to ending their mission in Iran, and so these are things that market will be quietly watching. And of course, markets had somewhat, I would say, discounted what was going coming up. If not in 14 days, it was only a matter of time, and it was not in doubt that US was going to do that. That is why market reactions today have not been very severe. We did see some strength in the dollar. Of course, oil has gone up by 3 to 4%. Gold reaction is telling because that is actually down compared to where it closed on Friday. So from the market's perspective, these developments were known, but what is not known is how Iran is going to react and whether they will finally decide to close the oil route to the global markets, and that is the most important thing that we are looking at. Of course, on the economic side, we had another dire report on manufacturing survey from Philadelphia region, and it came at -4 once again, and more particularly the employment situation worsened severely. So the manufacturing in the US has been facing severe constraint and a severe slowdown rather, and this can actually be going forward, resulting in a much larger hit to employment. There is also an indication that US GDP for Q1 will be eventually closing at -0.2%. So economic data has been neutral to negative for US, but of course this has been overshadowed by geopolitical development. But once the dust settles to some extent, either way, economic news will be in focus. Markets, as I said, have taken calmly. Somewhat, even the stock markets are only 0.3 to 0.5% lower across the markets, including Japan and Korea. And going forward, we have a lot of events, economic events to look forward to this week. We have the manufacturing surveys, PMI, from various regions, including the US. We have Owen's testimony to the Congress tomorrow, and that's going to be very important because there's a lot of politics involved as far as the monetary policy is concerned in the US. There's been questions about independence of Fed being threatened, and there will be a lot of questions to the Powell as to why, in spite of slowing signs, the Fed has continued to maintain somewhat a hawkish stance. And in fact, on Friday, we had one of the key members of the Fed coming out quite dovish against the known view of wait and watch, and he was saying that the signs available, or rather indicates that we should be acting on the rates, rather even to soften the rates. We don't have to really wait for something to big breakdown. This is what he was saying, and that was a very dovish commentary and very dovish comment. We will have as many as another six Fed members speaking on monetary policy this week. So, as I said, manufacturing survey, and then Fed chairman's testimony to the Congress, which will be very closely followed. How we answers the legislators' questions. Then we have the US GDP Q1 final reading, which is, as I said, expected at minus 0.2%. All important PCE core inflation comes on Friday. We know that CPI and PPI this month came softer, but of course, the annual inflation is still above Fed's target, and Fed continues to say the uncertainty of inflation from the tariffs expected is going to be something that will guide what they will do going forward. Therefore, these are the events which will be very key. Of course, German IFO survey is also there in this week. So a lot to look forward to. On the one side, we have geopolitics, and on the other side, we have the economic key events as well. I think markets are unlikely to take a very big directional move unless something very surprising happens on either of these two. I'm looking for a rangy market, at least as far as the major currencies are concerned. Euro was looking for a corrective move lower, but that has been really painful, and it's not really. So the underlying trend is much, much stronger for the euro right now. So that's not really relenting on the downside. And because the euro being the benchmark currency, generally other currencies hover in the same direction also. As far as the rupee is concerned, Friday was a very calm day for the rupee, somewhat slightly stronger after having seen 86.90 the previous day. And of course, there was also a large inflow of nearly USD 1 billion. This was related to the monthly rebalancing from MSI index, and but the important thing is that got fully absorbed by the market. Demand from nationalist banks and also from other importers. These could have been due to the fears that something could happen in the weekend, and that really kept the dollar rupee well supported at 86.60. And today also indications in the offshore market is that rupee is not going to fly, probably going to open around 86.80. Once again, we will also be on the wait and watch mode as far as the geopolitical developments are concerned. But at least we can be sure that rupee is not going to weaken too much. Oil being at still below 80 key level. Maybe I think we are likely to not react in a panicky way. So the rupee is concerned. Yes, for rupee also we have the PMI manufacturing survey and the services manufacturing survey preliminary readings for the month of June. which will be out, and of course the global economic events also. So I think rupee stays in 86.50, 87 range at least for now. That should be safe, and barring any major developments in the global markets. Thank you.
Okay, JK, that was really good. And yes, folks, there are quite a lot of things to watch out in the market with geopolitical tensions as well as the global economic updates. Just talking about the global economic updates initially, as JK mentioned, we've seen the employment situation worsening, manufacturing situations also showing concerns, slowing down with probability of US giving negative numbers for the Q1 GDP, and all these have put in questions on the policies by the Fed, with key members already asking the reasons to hold with such a available updates on the economy, and the signs already showing that the economy is suffering, and the need for softening of the rates. We do have updates on the economy front even further this week with the examples of core PC being released. But overall, it is also from the geopolitical tensions that we would see some bit of market reactions. Now, the question is, after US joining, would Iran retaliate, and how would they retaliate? They already have the approval to block the Strait of Hormuz, but would they actually block it, because it will also impact their close allies, as JK mentioned? So the question remains whether the retaliation will come in the form of blocking of Strait of Hormuz. On the domestic front, we can say that there was some large inflows on Friday, which initially showed some bit of appreciation for INR, but it was very well absorbed by the market participants on the backdrop of positioning for the weekend. The expectations remain that the currencies, even INR for that matter, should remain in a range, for USD INR, the range being 86.50 to 87. But it is one thing that as of now we are seeing that it should not be, or rather I should say INR should not be flying quite significantly on the backdrop of these events, as we still await the updates on the global front. That's it for today, folks. Thank you so much for joining in, and we shall come back again tomorrow with another round of updates. Thank you so much.